Michael Jordan was underpaid his entire playing career. 15 NBA seasons, 6 titles, 5 MVPs. Total salary, $94 million. Today, his net worth sits around $3.8 billion, and probably a lot more. And more than 90% of that showed up after he stopped playing basketball. The real story is how one competitive psychopath turned a rookie sneaker deal, a failing NBA team, and a handful of very specific bets into a machine that now makes him more in retirement than he ever did as the best player in the world, and the greatest of all time. From a kid in North Carolina who couldn't make varsity, to owning a NASCAR team that sued the league, took a $40 million settlement, and helped double the value of the licenses it holds. And if you're a creator or founder, this isn't just sports trivia, this isn't just a sports story. This is one of the clearest examples we've got of how to turn your prime into a structure that pays you long after you're done performing. By the end, you'll be able to sketch Jordan's money system on a literal napkin, where the cash really comes from, what almost broke it, and which parts you can actually steal for your own business and your own portfolio. All right, let's get into it. Phase 1, cut from varsity to the Nike meeting, 1963 to 1984. Jordan's story didn't start with a trophy, it starts with a list. Laney High School posts the varsity roster. Michael walks up, looks for his name, and it isn't there. He goes home and cries in his room. His mother lets him feel it, then tells him to go back into the gym. A couple years later, that same kid is 6'6", averaging more than 25 points a game and headed to the University of North Carolina. Then, the ball swings to him in the 1982 NCAA title game. He'd been preparing for this moment all season, too. He hits the jumper over Georgetown that wins the championship. And in his head, something locks in. I can take the biggest shot on the biggest stage and live with whatever happens. That shot puts him on the national map. A couple years later, he leaves early for the NBA draft, and Chicago takes him at number 3. Phase 2, the first royalty check, 1984 to 1991. In 1984, Converse has the stars, Adidas has the cool, Nike is running a shoe company trying to matter in basketball. Nike doesn't just put a shoe on the table, they put a business on the table. A signature line built around him, not just a team, and being the face of the product line, not just one of many. A 5-year deal richer than anything a rookie had ever seen. And crucially, a royalty was negotiated on every Air Jordan sold, something that no other shoe company would have done. And internally, Nike thinks they might do $3 million in Air Jordan sales over the course of 4 years. In year 1, they do about $126 million. He didn't just get the big deal, he got paid like a partner, not like a model. He traded a higher flat fee at the time for a small percentage of the sales forever. But look at what's happening in the background. In 1992, the Dream Team goes to Barcelona and vaporizes everyone. Basketball stops being an American league and becomes a global product. And then, in 1993, his father is and he walks away. He plays minor league baseball in Birmingham, hits .202, he's not good enough, but he still sells more tickets than anyone else in the league. Even failing in another sport, he's still the main event. That's not about stats, that's about brand. When he comes back to the NBA a little while later, the league is bigger, TV money is bigger, and the shoe business is on absolute fire, and everybody missed Michael Jordan. This is when Nike makes the move that locks in the second half of his wealth model. They carve Jordan into its own brand, not just Nike Air Jordan, a line under the swoosh, Jordan Brand, a sub-company with its own leadership, budget, designers, and P&L. Jordan Brand is now doing $6.6 billion a year and growing. And at roughly a 5% royalty, that's something like $330 million to him annually. Across 15 seasons in the NBA, his total salary was $94 million. And at this point, his Nike royalty check alone pays him 3.5 times that every single year. Most people hunt for the biggest paycheck in their prime. He hunted for the best structure. Phase 4, Wizards, humbling, and the first big ownership bet, 1999 to 2010. When the second three-peat ends in 98, he walks away again, this time into a suit. He takes a front office job and a minority stake with the Washington Wizards. The assumption is simple. Greatest player ever becomes the greatest executive ever. Well, not so close. The team doesn't get better, the vibe in the building gets tense, then because he's Jordan, he does what only he would do. At 38, he laces him up again. 2 more seasons as a player in a Wizards jersey, he's still putting up 20 a night at 40 years old. But the playoffs never show, and when he finally retires for the third and final time, he expects to slide back upstairs and get the keys again. Instead, the owners offer him a $10 million thank you check and a goodbye. Jordan reportedly throws the check back and leaves. It's a real business L. But during that whole stretch, the Nike checks, they never stop. The royalty machine kept humming, and he disappears from NBA life for a while. Phase 5. Buying the worst store in the mall. Charlotte's franchise is a mess. They're the Bobcats, they're losing, the arena is half empty, the business is bleeding, and then by 2010, Jordan buys controlling interest. The reported total cost, about $275 million. And from the outside, rich guy buys hometown team, ego. From the inside, the calculation looks very, very different. There are only 30 NBA teams on Earth. The league keeps negotiating richer national media deals, and every time a franchise changes hands, the sale price is higher than the last one. And on the court, the results are brutal. 7-win seasons, 0 playoff wins in his entire majority run. But 3 things are compounding in the background: league economics, national TV deals, international rights, and sponsorship pools that keep growing. More billionaires every year, same 30 teams. Supply stays the same, but the demand rises. And no forced selling. His Nike money means there's never a moment where he has to unload just to stay liquid. He can sit in the paint if he has to. And 13 years later, he does just that. A group led by Gabe Plotkin and Rick Schnall shows up. They value the Hornets at around $3 billion. Jordan sells a majority and keeps a hefty minority stake. Let's run the math. Going from $275 to a $3 billion valuation in 13 years is roughly a 20% annual return. So while Twitter may have roasted him for bad draft picks, he quietly ran double the market returns on a 9-figure check. He was willing to look bad in the short term, on the court, in the press, because he understood the asset he owned was not a playoff team, it was 1/30th of the NBA. Phase 6. Tequila, NASCAR, and the web of side bets 2019 to 2026. With the Hornets majority sale wired and Jordan Brand still dropping 9-figure royalty checks every single year, he starts filling in the rest of the map. First, tequila. Sincoro, a premium tequila line with a 5-sided bottle and pricing that starts where most other brands top out. We're talking roughly $90 for the entry bottle, $300+ for the higher end variants. Within a few years, you're staring at hundreds of millions in gross sales while aligning with some of the biggest names in the game. And unlike slapping his name on a cheap vodka, this cap table is all operators and owners and lots of other celebrities and athletes. Then, NASCAR. Jordan grew up in North Carolina. NASCAR lives there. He and Denny Hamlin from 2311 Racing, they buy 2 charters, sign Bubba Wallace, stack real sponsors. And on the surface, it's another celebrity buys team story. But then they do the thing that almost nobody in the world would do. They sued the league. 2311 and another team take NASCAR to court over how charters and revenue are handled. Most team owners grumble in private and live with the bad economics, but Michael Jordan is willing to risk the relationship to change the rules. When the rules are wrong, you don't negotiate a better paycheck, you fix the rules. It's the same competitive instinct, just pointed at contracts instead of scoreboards. And all of that sits on top of real estate. His properties are estimated north of $500 million. The Jordan money map, how it all connects. Put Jordan in the middle and draw 4 circles around him. Circle 1, brand engine. Jordan brand at Nike. Retros, new models, collabs, apparel, kids lines. This is the cash spigot. $6+ billion in revenue, throwing off roughly $300+ million a year to him directly. Circle 2, capital assets. The Hornets equity he rode from $275 into a $3 billion valuation and a minority slice that he kept. And the $500 million of real estate. Circle 3, operating bets. 2311 Racing, Sincoro Tequila, restaurants, the golf club, the dealership. Circle 4, financial and venture positions, DraftKings equity for his board seat, stakes in sport, Web3 and gaming positions. And here's how it all works together. The brand engine throws off more cash every year than most companies will see in a decade. That covers his life and seeds big bets in Circle 2, like buying the worst store in the NBA mall in 2010. The Hornets flip then refills the tank with billions, which he redeploys into Circle 3 and 4, NASCAR, tequila, tech. Every operating bet pulls the brand deeper into the culture. Tequila bottle stays behind the bar, the race car on Sundays, the betting app on your phone. Those in turn reinforce the mythology that keeps parents buying Jordans for themselves and their kids. It's not a random pile of hustles, it's a loop. Strip everything else away and look at 2 numbers for a second. $94 million in NBA total salary over the course of 15 years, and roughly $330 million a year in Nike royalties right now. At this point in his life, sitting on a golf cart, he makes about 3.5 times his entire playing career every 12 months in shoe money. And break it down further, around $27 million a month, $900,000 a day, $40,000 an hour. Present value of that royalty stream alone sits in the low billions. Before you add $1 of Hornets, NASCAR, tequila, DraftKings, real estate, or many of the other bets that we don't even know about. Here's the move. A salary is linear and dies when you do. A royalty on a compounding brand is exponential and can keep paying your kids' He used his prime to negotiate a structure that lets his past keep sending him checks. You can sketch his whole financial life in 3 lines. Top, a royalty printing sneaker division inside Nike that pays him hundreds of millions a year. Middle, one distressed NBA team bought at the bottom and sold at a $3 billion valuation, plus a set of category plays, tequila and NASCAR, where his name and timing create outsized upside return. Bottom, real estate and financial stakes that store or multiply the capital those first 2 tiers throw off. What you can actually steal from this. Jordan's most important financial decision wasn't the size of his last Bulls contract, it was the royalty clause in his first Nike deal. Your version is using your current leverage, attention, skills, or results to get equity, rev share, or upside, not just higher rates. Michael Jordan didn't end up at $3.8 billion because he could score. He got there because once, as a rookie, he signed a deal that paid him like a partner instead of an employee. You just have to stop treating today's attention like a finish line and start treating it like the currency you use to buy the thing that pays you when you're done playing your current game. And check out this next video where we dissect Mr. Beast's entire business model to show you how he uses his YouTube channel as the top of funnel funding that feeds the rest of his $5 billion plus business empire.